Welcome back, and you're watching the markets on ET now. Let's keep it going with what one should be expecting in today's day as well. And let's bring on board Sanjiv Bhasin, Director at IIFL Securities, joining in with us. Very good morning, Sanjiv Bhasin, sir. And in terms of overall, let's start today by talking about Reliance as well as Walt Disney, and obviously the definitive agreement they've signed. What are your thoughts coming in for Reliance? Yesterday it was overall in terms of a trade was quite weakish. Reliance also saw a very sharp fall. What's your view on this now?
Yeah, good morning. So, Winnie, I think it's a win-win deal, at least for Reliance, which is stepping up their stone. As far as media now becomes a very, very key component, and sports channel and the whereabouts, and it is gaining more advantage after the fallout of the Z Sony deal. I think this is a win-win situation. They've committed big capital, and Walt Disney, as you globally know, is a $200 billion company. So I think media in India is still relatively one of the biggest under-owned and estimated as far as earnings go. And there is a long way forward. So Reliance always invests with a long-term view, and I think this would be a positive on the structural side. It is a foray into media, which we know is something which is in the world context is gaining even more traction in the Indian context. So I think it's a thumbs up. On the Reliance stock performance, obviously yesterday you saw a sell-off because of inherent reasons of mid caps being overbought, SEBI stipulation. Those are all causes and reasons. There was froth on the mid caps, and that what saw some sort of expiry related pressure on derivatives and so on. But that's part and parcel. After you've seen such a big run, I think it's part and parcel. For me now, Reliance and HDFC Bank should be the main pillars of the index, and the rest of the mid caps can continue to be consolidating for some time.
Okay, fair enough. And what's the outlook then when it comes to, Sanjeev, the entire auto space? Eye on the February auto sales, and we're expecting that maybe for the CV sector, the pre-election order slowdown will hurt volumes?
Good morning. So, Awan, a large part of that is already in the price. We think in the CV space, we still like Ashok Leyland as our top pick, Maruti in the four-wheeler space, and we continue to be overweight on Bajaj Auto. Now, as far as performance goes, you will have to see that the stock prices have already depicted the best of the auto sales. Look at some of the OEMs which are starting to perform. One stock which I've been recommending all the way from 65, 70, 90 is Motherson Sumi. I think that is in a very sweet spot because globally now their overall reach in different places has played out very, very well. So, you have to be selective in the stocks which you buy. As a disclosure, Ashok Leyland still remains our top pick. It is getting more market share in the CV market from Tata Motor. The bus market is doing excellent. And overall, their new entrants, particularly the DOST model, which is an ICV, that is doing very, very well. So Ashok Leyland, Maruti and Bajaj Auto, along with Motherson Sumi, would be four good picks for you to make money in the near to long term. On the other hand, we think most of the other stocks, particularly Mahindra and the others, we've taken some chips off the block as it hits new highs. That has been a huge outperformer in our portfolio.
Right. Kunal, let me come across to you also here and right now. Just bring in your views in terms of autos. What is looking exciting to you? We did have commentary coming in that in the passenger vehicle side, the EV segment, that's not doing well. Other than that, right now in terms of an expectations, PVs, the passenger vehicles is expected to be stable. But, what is overall in terms of the view that one could watch out for from the auto sector and in terms of what is looking attractive in terms of charts?
See, I'm very bullish on the space for the entire auto pack, and it's possible that many of the stocks which have run up, they could see a phase of a correction. But we have to understand that a correction is completely different than a trend reversal for many of the stocks within the auto pack. Now, look at Tata Motors, what the stock has done over the last 4 years from 2020 lows, when it was double digit, and it's now on the verge of breaking past about a possible 4-digit mark. So it's been a phenomenal journey for the stock in the last 4 years, and of course in the last 3-4 years there have been multiple phases of correction for the stock price where there's been a lot of negative news flow, etc., surrounding the stock price. But I believe that one has to try and distinguish how correction shapes as well as a trend reversal. Look at M&M, the stock from 700 levels from 2022 mid has come back towards a point where it's now about to break the 2000 levels also. Maruti's made a very strong comeback this year. It's been a huge laggard, a major underperformer from the auto pack. Larger cap names, that stock is looking attractive at the 11,000 plus mark where it's trading right now. So there are a lot of differentiated stocks within the auto pack which are looking attractive, and I believe it's very much possible that these stocks may continue to outperform. Now the other two names which are also very attractive, one of them is actually Hero MotoCorp. Now from 4,900 approximately 5,000 levels, the stock has already seen a 15% correction. My sense is that maybe the stock can come back towards 4,100 mark. That could be a zone of extreme oversold, as well as a point where the value may come back again for the stock price, at least in terms of demand. So I would believe that that could be a very good territory in case if the stock happens to test the 4,100 mark. Could be a good level where someone could look to buy. And even Bajaj Auto, I think the stock has done exceptionally well. Went up to as much as I think 8,400 plus levels. Yesterday, of course, the stock corrected. But I believe in case if it comes back towards 7,500 to 800 zone, could be a very good buy. So net, the entire basket looks attractive, and there are a lot many stocks to choose from. Unlike many of the other sectors, like just a differentiated sector like maybe private sector banking stocks, etc.
All right, very bullish on the entire auto space, says Kunal. Meantime, watch out for IndusInd Bank in trade. The management meet took place, and now Macquarie has come out with their brokerage note. They maintain an outperform stance with a target of 900. What are the key takeaways and observations from Macquarie? We've got Gaurav here to take us through that. Morning, Gaurav.
IndusInd Bank is definitely going to be in focus because Macquarie met with the management of IndusInd Bank, and according to the management, the system liquidity, which we have seen some problems in the system liquidity, that are going to stay in the near term, but they are believing this is going to ease somewhere when the rate cuts are going to happen, and they are expected again in H2 FY25. From here on, they are also expecting the rate cuts will also reduce the gap between loan growth and deposit growth for the banking segment. But if you look at IndusInd Bank and the segment-wise performance, we have already seen some strong credit demand coming up in the segments such as vehicle financing and microfinance for IndusInd Bank. We have already seen the bank gaining share in some of the segments such as LCV financing, car loans, microfinance and credit cards. But management has again reiterated their focus on reducing their exposure from the credit card segment because they want to limit the exposure of the unsecured book overall for the bank. Lastly, if we look at the outlook from the management, they are expecting loan book growth to be somewhere 1.5 times higher than the industry growth level. They are expecting slippages to normalize from here on. And lastly, the contingent buffer, which was actually a key concern in 3Q FY24 results. Now management is expecting to increase their contingent buffer to make the asset quality more stabilized and more stronger. Lastly, on the back of this, we also saw that Macquarie maintained its outperform rating and a target price of 1900 rupees per share. They have also maintained IndusInd Bank as one of their top picks because if you look at the valuation, according to Macquarie, it's trading at 1.6 times price to book value, which is still a little cheaper given that the ROA trajectory has been strong for the bank. So all in all, strong words have come out from management as well as Macquarie on IndusInd Bank. So let's see how bank performs in today's trade.
For that, Sanjiv, meantime, just wanted to scratch that point that you were talking about with respect to the kind of froth that we're seeing within the broader universe. So is yesterday's move, maybe the SEBI MF norms spooking the market, all of that leading up to more carnage within the broader universe? What is the sense that you're getting?
Well, see, Avan, corrections are always uncalled for, but they clean out the men from the boys. And it was much needed. Every day people were making money on mid caps, rightly or wrongly. There is money coming into that. Maybe SEBI sounded a word of caution that, entry is easy, exit sometimes becomes difficult because of liquidity. But I think it's part and parcel. You have the US inflation data, and maybe 22,000 was a sticky number staying above that. We still think the broader market is where the money is. It's going to be private banks, read my lips, which are going to lead the market higher. And I think you should be in marquee names. Mid caps is something which we've been telling people to take some chips. But now when you get this correction, utilize the right part to get into. Look at the OMCs from 600, HPCL is 500, from 195, IOC is 167. And ONGC has not corrected from 280 still. I think that is the place where you should be watching out for, because PSUs will give you an opportunity of extreme greed and fear. When there is extreme greed, take some money off the table, and extreme fear again gives you an entry opportunity. So IOC, NALCO, ONGC, HPCL for us are buys in this in this correction. And we think Avan today being expiry, I think second half could surprise on the upside because it is more of retail liquidation. But I expect the first week of March to see much more traction on maybe the large caps coming back. However, I continue to feel that the second half of March may be a little tricky. So we will have to bear with volatility being part of the market for the next fortnight.
Okay, maybe volatility will be a part of the market the next fortnight. That's the word coming in from Mr. Bhasin. Thank you so much, sir, for joining in with us this morning on ET Now. But let's move on and talk about MSCI.